This afternoon, we can tell you that SoftBank and WeWork are very close to a deal that could be announced as soon as tomorrow, under which SoftBank would take control of WeWork with a new equity infusion of between $4 to $5 billion. Most of it new equity that would be infused into the company, though some of it also being reserved for the possibility of some selling shareholders. This would, though, give SoftBank control of WeWork. It is, of course, a space-sharing company that has been, well, to put it mildly, in the spotlight for some time when it was unable to reach an IPO some time back after many investors balked at so many of the different things they learned in the S1. Management has since changed. Adam Neumann, of course, stepping down as the company's CEO. But since then, the need to raise new capital has been paramount at the company. And they have been talking to J.P. Morgan, largely, though, about a debt financing. And really, when you've got a debt problem already, more debt isn't necessarily the answer. What conceivably would be, and give them more time, is a large equity infusion. It does appear they're very close, though not yet finalized, on reaching that deal with SoftBank. To be clear, it would be SoftBank itself that makes this new investment, not the Vision Fund, which has already invested some $10 to $10.5 billion in WeWork at far higher valuations. In fact, to put this in some perspective, the new deal being contemplated would value WeWork at between $7.5 and $8 billion, roughly. And again, people close to these talks are not giving the absolute specifics, and some of it does depend on the final deal. $4 to $5 billion in equity, most of it being infused as new equity, but some, of course, also coming in the form of secondary or shares being sold by selling shareholders to SoftBank. As well can tell you, the expectation is that Marcelo Claure, somebody we know fairly well, of course, the former CEO of Sprint, who's very senior at SoftBank, would take a leading role, at least in the interim, in terms of the management at the company. Adam Neumann's stake, I am told by people familiar with the talks, would fall to the low double digits in terms of percentage. And again, all of his voting control and everything would go away, given that SoftBank would have control of the company at this point. It could be as soon as tomorrow. We'll see. There have been a lot of stops and starts along the way. I am told that Mr. Massa and Mr. Neumann have somewhat repaired their relationship. If you recall, they were, of course, very, very close, or at least Mr. Massa certainly was a huge supporter of Mr. Neumann's for quite some period of time, but they hit some significant turbulence when WeWork itself did over this last couple of months. But I am told they are at least working together again. Unclear what role, if any, Mr. Neumann would have on a day-to-day basis, but certainly as the founder and longtime CEO of the company, his input might be helpful as well when SoftBank takes control. Again, if and when they take control. It does appear likely they would own between 60 and 70%, Courtney, I'm told, of WeWork when and if this deal is completed, as seems highly likely according to people familiar with the situation. Though, as you well know, we wait until we see the press release to say something is definite.
Sure. David, fascinating details there, and particularly the valuation, 7 to 8 billion, single-digit billions, just a far cry from the 47 that supposedly the last private round was done at. My first question for you is whether we know at all whether the likes of J.P. Morgan or Goldman Sachs or any of the big investment banks that have been so involved with this company, whether they've taken a little bit of a hit or made any concessions to SoftBank and WeWork in order to help the deal get over the line, because otherwise it does feel like SoftBank very much is stepping up to the plate and taking the next level of risk once again, something that will be beneficial to JP Morgan if they're not having to be the ones to do it. Do we know if they've been involved in making some concessions, to get this over the line?
Yeah, you know, Wilfred, I don't know about concessions. I know that J.P. Morgan, of course, and we know, remember, Jamie Dimon and Mary Erdos were very much involved during the period of time when the company was planning on going public and trying to pave the way for that and deal with investors who were pushing back significantly and figuring out a way to get there. At this point, my understanding has been that J.P. Morgan has been focused on trying to provide some sort of a financing. But largely it would be either preferred or include debt as well. And that was not necessarily something that would have perhaps given WeWork enough time. Adding more debt to an already leveraged balance sheet, certainly pushing out, obviously, the maturities and the like would be helpful, but perhaps not as helpful as bringing in pure new equity, putting the control of the company in the hands of Mr. Massa at this point, who, of course, has been by far the largest investor through the Vision Fund that SoftBank controls. So that's where it stands. Other concessions, hard for me to say. I mean, you know well, of course, JP Morgan's involvement here was in so many different areas. Some of their private clients, right, Wilf, owned this. They had personal loans to Mr. Newman as well. Now, it is my understanding that part of this may involve the ability of Mr. Newman to even sell some stock to SoftBank and therefore expunge some of those loans, which I guess, to your question, Wilf, would be helpful to JP Morgan in some fashion.
Well, it definitely would. I would say, firstly, on the headline, any deal that was an equity deal is a huge relief to JP Morgan because they don't have to necessarily write down any debt as if it was going to become a going concern, as they might have done if they'd had to fund the company with a fresh round of their own debt. So in the first level, the fact that SoftBank's doing the heavy lifting, not them, is a help. I would be surprised. It would come across quite bad, I would think, if Adam Newman was able to get some cash out at this point, even if it's at a lower valuation than he would have dreamt of back in the day. I think that would come across quite badly in terms of those ongoing questions of corporate governance around this whole issue, if he's able to liquidate some of the risk when others aren't.
It doesn't really matter, though, Wilf. It's a private company and staying a private company most likely for a very long period of time, right? It's not as though they're going to try and have public shareholders to follow in after them.
It's not public shareholders that are suffering, but there are other private clients, as you correctly pointed to, that have been involved in this that might feel a little bit hard done by. But the other thing I think is really interesting, David, is that if SoftBank's making this investment, clearly the Vision Fund will now have to update its carrying value in WeWork to whatever the latest valuation is. But nonetheless, it is SoftBank that's helping bail out overall the investment. I guess some kind of admission that this hasn't been successful. There's going to be a write-down in the Vision Fund, but it's not as bad as it could have been, perhaps, for the Vision Fund investors.
Perhaps not. And, it's interesting, of course, you've got SoftBank on the one side and then the Vision Fund on the other. As you well know, Wilf, these things are dynamic, and I want to make a couple of calls. So I want to do that and then perhaps come back on, if possible, to update our viewers even further on this story since it's moving along. And I want to make sure we can be clear as possible on the equity infusion here, what is new, what is existing. So let me go do that, and perhaps we'll have more. But again, SoftBank taking control of WeWork. If they get to the finish line, they're all behind closed doors right now. The plan to announce a deal perhaps as soon as tomorrow. I'll send it back to you.
And David, before we let you go, I know you want to make some calls. There was obviously a big fear that this company was literally going to run out of money. So is $4 to $5 billion enough, at least right now, for a stopgap to keep them from doing that with this equity infusion?
That's a great question, Courtney. They were weeks away, is my understanding, from being in a position where it was going to become a day-to-day issue. And certainly this will give them a lot more time. Just how much, not clear. And until we get all the specifics in terms of equity and or accelerating equity and debt, I want to make sure I understand exactly what's going in. But it will give them certainly more time. There's no doubt about that, Courtney.